Shares of General Electric Company fell sharply on heavy-volumed Monday amid concerns over what recent management changes might suggest about the industrial conglomerate's third-quarter results, which are due out next week. The stock GE, plus 0.34%, tumbled 96 cents, or 3.9%, to suffer the worst performance among components of the Dow Jones Industrial DJIA, minus 0.06%, and to close at the lowest level since August 25, 2015. Volume ballooned to 139.8 million shares, enough to make the stock the most actively traded on major U.S. exchanges and more than triple the full-day average of 43.6 million shares. GE said late Friday that Chief Financial Officer Jeffrey Bornstein was leaving the company and that fellow vice chairs John Rice and Beth Comstock will retire. Earlier last week, Jeffrey Immelt retired as chairman nearly 3 months earlier than originally planned, as current Chief Executive John Flannery was elected to the additional role of chairman. Flannery became CEO in July, after Immelt stepped down. J.P. Morgan analyst C. Stephen Tusa said these management changes reinforce his view that the fundamental challenges that GE are facing are worse than Wall Street is currently discounting. "We view this incremental new wrinkle as a clear negative," Tusa wrote in a note to clients. Sell-side bulls say this is the new CEO showing strength, as the CFO is accountable for cash flow. If this were the case, we wonder why CFO Bornstein was kept around this long and pitched as such an important part of the solution, noting that the weakness in cash flow in the first half of 2017 isn't new information for investors. History indicates investors have good reason to be worried about GE's earnings report. The stock has fallen on the day results were reported the past 7 straight quarters by an average of 1.6%. The company is scheduled to report results on October 20, before the market opens.